buying a car, or even buying a home. A smart investor recognizes the benefits of regular and diversified investments to protect investment from losses, unexpected events, and always looks before they leap so that they can cash in on the wonderful effects of compound interest. After all, a smart investor knows every investment opportunity is unique and should match their needs, goals, and risk tolerance while making sure to ask all the right questions. A smart investor is not under pressure to make hurried investments to avoid fraud. They know the risks and stay far away from get-rich-quick schemes while ensuring the company that they wish to invest in is licensed by the Securities and Exchange Commissions. So, what do you say? Do you want to be a smart investor? All it takes is cultivating resilience and wise habits. Remember, a smart investor avoids fraud. Visit seczambia.org.com or our social media platforms today to start your journey to being a smart investor. Here's everything you need to know about being a smart investor. A smart investor recognizes the benefits of planning for his or her future needs and goals, such as education, marriage, buying a car, or even buying a home. A smart investor recognizes the benefits of regular and diversified investments to protect investment from losses, unexpected events, and always looks before they leap so that they can cash in on the wonderful effects of compound interest. After all, a smart investor knows every investment opportunity is unique and should match their needs, goals, and risk tolerance while making sure to ask all the right questions. A smart investor is
Thank you, everyone. I hope you enjoyed that. We hope you enjoyed that short video about being a smart investor. And without much ado, we shall proceed into the presentation that will be made by Stali Mugala, the Manager for Financial Inclusion and Education. With that said, I hand over to you, Stali. Thank you.
Okay, good afternoon, everyone. Thank you, Sichone, for that. So as Sichone has mentioned, we get a lot of requests. And one of the popular requests is how can someone participate in the capital market? What are the options that are available? How can you save? How can you invest? So I'm going to take you through a short presentation on how you can invest and save in the market. Can you see my screen? Okay. Okay. All right, so we have what we call a SEC guide to saving and investment. So to start our presentation, I will talk about about the SEC. So the SEC is a regulator of capital markets in Zambia, and we established under an Act of Parliament, which is the Securities Act, Cap 354 of the laws of Zambia, which was repealed and continued by the Securities Act number 41 of 2016, as amended by the Securities Act number 21 of 2022. In the market on one hand, and on the other hand, to ensure there's development and supervision of the securities market. So we are mandated to provide and promote and otherwise support financial education, awareness, and confidence of financial products and institutions and services that are found in the market, in the capital market. Maybe I may just mention what capital markets are. So capital markets are a place invest in long-term securities. Okay, so we have issuers of securities that are coming to the market to look for funding. And then we also have investors, retail and corporate investors, and institutional investors. The retail investors can be you and me, who are looking to build wealth and grow our money by investing in this market, meaning we're giving our money to the institutions that need the money. Okay, so why is it important to save and invest? So saving and investing is a pathway to financial security. As individuals, we have a lot of events that we'd like to save for example, home ownership, our children's education, a comfortable retirement. So saving helps us to just plan for those things and save towards those particular key life events. So one can save, anybody can save and invest. It's not just meant for the wealthy, but it's for anybody. The key is to start somewhere, don't wait. You need to just start and be consistent, because saving in the capital market is long-term in nature, because the products that are found in the capital market are long-term in nature and offer you an opportunity to invest over a long period of time. And that way you'll be building wealth and you'll be able to get a return out of it, because your wealth doesn't grow overnight. So start now is what I would urge you to do. So how, some of the keys to financial success will be, firstly, one needs to make a financial plan, okay? You need to make a plan on how you intend to grow your wealth, okay? Make a plan, identify your financial goals, identify the needs that you have as an individual and where you want to be. So you have a plan and what your goal is, what you're saving for. Is it a home, like I mentioned? Is it your retirement? Is it for your child? So we are all at different life stages, so anybody can invest. Depending on the stage that you're at, you can also pick a product. I'll get to the product a little later. So another key aspect to getting to financial success is that you need to pay off your high debts, your debts, okay? As if you'd like to save properly, you'd need to make sure you pay off some of the debts, because if you've got a lot of debt, you're going to probably think, I'm not able to save because I've got too much debt that I'm servicing. So just balance that out, where you are balancing your debt as well as the amounts that you want to put aside in terms of saving. So starting to save and invest, you can start as soon as you've paid off all your debts, you are good to go. Okay. Then what are the things that you can be saving for? Like I mentioned, you can be saving for a home, for retirement, a child's education, medical emergencies. All these are things that you can save and invest for. So that's how you start. Okay. So firstly, you need to know your current financial situation. You figure out what you own and what you owe. Okay, so meaning you own what you own are called your assets, and what you owe are your liabilities. So get to know what your situation is, your income or your assets versus your liabilities. Then you create a net worth statement, whereby you have on one side your assets, on the other side you have your liabilities. Everything listed down, don't leave out anything. That way you'll be able to know where you can find some money or where you have money that can remain, which is meant for you to save, okay? Then another key aspect is that you need to learn to track your income as well as your expenses. Write down what you are earning, what anybody else in your, let's say in your household is earning, and what your expenses are, meaning create a budget, okay? A budget is just simply writing down on what you need to spend on, what you are earning, and your priorities. Then a key thing to do is to pay yourself first, meaning you're saving. That is you paying yourself. Why do we call it paying yourself? Because this is money that is going to work for you later on. In the case of an emergency, or if it's a saving, if it's an investment, it will pay you at the time that you do not have, let's say, income you don't have an income that you can be getting on a daily basis or a monthly basis. So you're paying yourself first by putting something aside for you to use in the event of not having an income. That's what paying yourself first means. Okay, so this is simply an example of a financial plan. I remember I mentioned that you need to state your assets against your liabilities. So this is just an example of, let's say, the kind of things that are considered assets and what are considered your liabilities. Then you'll be able to find the net worth at the end of the day once you balance off what you're owing and what you own. Okay. So there's a difference between saving and investment. I know Sichon in his opening statement mentioned that we mentioned that saving is like a start point, right? It's where you are starting in order to build to get to investment. So I'll just take you through the differences between the two words and two actions. So to save simply means to put something aside, okay, in simple terms. Then to invest is you putting this money or into something that will earn you an interest or a return, okay? So in most cases, the purpose for saving is for short-term goals as well as emergencies. Then for investment, it's for long-term. Remember, we're talking capital markets, and capital markets are products that are long-term in nature or investments that are long-term in nature. Even the money that you're going to raise in this market is long-term in nature, okay? So investing is for long-term. So in this case, if it's capital markets because you're investing for a long-term. Long-term in that the products that are found in this market are 12 months and above. That's why it's capital markets. The products that are below 12 months fall in the money markets, okay? And an example of the products, for saving products, you have your bank accounts, your savings accounts, and your fixed term deposits. All those are for you to save, okay? Then for investment purposes, you have your shares, you have your bonds, you have real estate, commodities, ETFs. All those are products that you can invest in long term, okay? In most cases, the risk for when you're saving is low, okay? But then also your money grows at a very slow pace, okay? Because in most cases, saving doesn't really give you a return because you're just simply putting money aside, okay? Even if it were a bank account, I'm pretty sure the interest that you're getting on that account is pretty minimal, okay? Unless it's an actual investment account, okay? So in terms of investment, the risk is higher because the value goes up or down. When you decide to make an investment, one of the things you need to know is that investing in any product is quite risky, okay? So just the risk will vary according to the type of product that you invest in, okay? And like I mentioned, the return on saving is small, it's minimal, but in investing, there's potential for growth in terms of the return that you're getting. The reason you're investing is to get a return. So in most cases, it can be slightly better than saving. But please take note, investment comes with risk, so prices will go up or down, interest rates also go up or down. So that too is a risk and is something that you need to consider before you make your investments, okay? So saving is best meant for emergencies. It's like an emergency fund between 3 to 6 months. Like I mentioned, short term, that's you saving, or simply putting money aside, that's you saving. Then investment, on the other hand, is for you to build wealth over a period of time, and also for things planning, things like retirement, children's education, buying a home, that's you investing, okay? I'll now delve a bit more or delve a bit deeper into the kind of products that you find on the capital markets. I'll speak to just 3 traditional products that are found in the market, which are your shares, your bonds, and collective investment schemes, okay? So a share is simply a piece of a company that one gets to buy, okay? So this is equity. So when you invest in shares, shares are for companies that are found in the capital market. These are the companies that have issued their shares to the public, and one is able to invest in them. So when you acquire a share or you buy a share, you're simply buying a piece of this company, and you're going to own that particular piece of the company for a lifetime, or for as long as you decide to sell it or let go of it, okay? So it means one of the benefits that you're going to get out of you owning a share, like I mentioned first, you're owning this share for life, okay, is that when the share price of this company does well, or this company pays a dividend, you get to benefit from that. So one of the benefits is you getting a dividend, which is when a company performs well, you get your dividend. And then also, in the event that you decide to sell the share that you bought in this particular company, if the company over a period of time, the share price at which you bought at, for example, has gone up, you'll be benefiting from what we're calling capital gains. So you will be able to sell the share and you'll benefit from the capital gain, which is the difference between the price at which you bought your share and the price at which you are selling if the share price has gone up, okay? So that's one of the benefits. There is a risk to buying shares and or rather equity. Okay, sorry, I was getting a signal that you couldn't hear me. Can you now hear me? Yeah, okay. So shares are also quite risky, like I was saying. So in the event that the company does poorly or the share prices do poorly, it means you will lose a portion of your investment, okay? It means the value of the stocks that you've bought can go down in the event of share prices going down. So that's the risk that you take up when you buy shares. Like I mentioned in the start, every investment is risky. There are just different types of risks. And also, what will determine or what will help you decide where you can invest is also your risk appetite, which is something you can find out after you've done an evaluation or a consultation with an investment advisor who can advise you once they do a risk profile on you, okay? Then I'll speak about the bonds. So bonds are an IOU instrument. They're also a security that is found in the capital market. So in the case of a bond, the company, or in our case, I can speak to, let's say, government bonds, it's where you as an investor are lending money to the government or a corporate, okay? You're lending this money to the government over a period of time, a particular period of time, and you will get your money or your principal amount at the end of this particular tenure, which is at the time the bond matures, okay? But then, one of the benefits of you investing in the bond is that you're going to get your return before the maturity of your bond. For example, if it's a 10-year bond, you'll be able to get what you call coupons. Your interests are called coupons in the case of bonds. You'll be able to get your coupons every 6 months. In Zambia, our government bonds pay a coupon every 6 months for the 10 years that you've invested in this particular bond, okay? Once you've gotten, so every single year for 10 years, you're getting your coupon. Then at the end of the 10 years, you will be able to get the money that you invested in the bond, which is your principal amount, okay? So that's the benefit of you getting to invest in a bond, because you are getting your coupon in advance or your interest in advance, okay? A bond is considered a low risk instrument, not risk-free, but low risk. So, for example, the risk could be that if the company or the government becomes bankrupt, they're not able to pay you your money back. That is the risk that is associated with a bond, okay? Then we have another product in the capital markets, which is called the collective investment scheme. So collective investment scheme are managed by a fund manager who pool resources from different small investors, and they put these monies into different asset classes and invest on your behalf, okay? So instead of me as an individual going into a particular listed stock, for example, I'm buying one share of a particular company that is listed. In a collective investment scheme, you have a fund manager who's a professional who's managing these funds for us, and a number of us will give our money to a fund manager who then spread the risk by investing in the different asset classes, okay? So instead of just one share, they'll invest in 3 other stocks, and maybe even in property or just various asset classes that are found in their portfolio, okay? So what this does is it spreads the risk of me making a loss should the company make a loss, because I'll be gaining from the performance of another company, because I'm pretty sure it's not like all the companies will perform badly all at the same time. Okay, so that's how a collective investment scheme works, and that's the beauty of you investing in the collective investment scheme, because you're spreading your risk across multiple companies, industries, or various asset classes. All right. So how do you invest? So most of the questions that we get at the commission is, how can I invest? How do I start? Okay. So in the case of shares, you open a brokerage account, the same way that you get to open a bank account. Okay. So you open a brokerage account with a SEC licensed broker. So as a commission, one of the ways in which we protect you as an investor is to make sure that the products that are found in the market are authorized, and then also the intermediaries that are found in this market are licensed by us, the commission. We ensure that these are fit and proper people who we've done a background check on, so that they can then invest and make sound investments on your behalf. Because these are professionals, they are trained to do this work. They will also be able to advise you on the kind of product on the types of products you can invest in, depending on your risk appetite, also depending on where you are, at what stage you are at in your life. If you're at the point of retirement, you obviously cannot invest in a certain type of product because it's not meant for you. There are certain products that are meant for let's say, people are just starting work and whatnot. But all that is professional advice that you can get from an investment advisor. Okay. I must also mention here with a disclaimer that what I'm offering is not financial advice. It's simply financial education. If you saw the title of my presentation, it's just financial literacy. We're just trying to ensure that you are knowledgeable enough to know where to go should you need to start investment and the options that you have out there. Okay. So firstly, you open the brokerage account, like I said, then you deposit your funds in that account. It's also important for one to do some research. You do your due diligence, okay? Find out if this broker that you want to invest with, for example, is a licensed provider. How do you do that? You can call us at the SEC. We'll be able to help you. And we also have a list of everybody that is licensed under us on our website. We'll share the details of the website, and you'll be able to see that list. Then also just make sure that you also research of the type of company that you are investing in. For example, we're talking about shares right now. So meaning you're going to look at the companies that you find listed on the LUCE. There are various companies there under different sectors. Some are in the banking sector, some are in manufacturing, some are in mining, some are in agriculture. So you can find out the performance of this company yourself. Just do background checks. You can look at their financial statements. All that is something that's going to help you to make an investment decision, okay? So after you've done your research, you can then buy your shares. You can do this through the broker. Like I mentioned, the brokers are people that are professionals and are licensed by the commission. So you put in your money and you invest with the broker. They help you to invest, okay? You can also use what is called the LUCE app, because we do know that nowadays you do not need brick and mortar to get to make an investment. We don't expect you to walk to the LUCE or walk to the broker to do this investment. So you can do it via your phone on a mobile app, and you'll be able to also invest, okay? For more details on how the LUCE app works, you can contact the LUCE via their website, okay? Then once you've done your investment, you just don't sit back. As a smart investor, a good investor, would urge you to monitor your investment, monitor the performance of your investment, regularly check how your money is, what your portfolio is looking like. If you feel I'm not performing well here, or I feel, of course, on your own or with the help of an investment advisor, they can advise you to see where you can balance your portfolio. So you'll be able to sell off some shares, buy something else, you know, things like that, just to monitor that and make sure that your investment is safe and is performing in the way that it should be performing, okay? How do you invest in bonds? So to invest in bonds, you need to check the bond issuance check which bonds are available. The Bank of Zambia does post on their website the dates at which the bonds are issued. So you'll be able to see which bonds are available for under the government bonds, that is. Then you can approach you can open an investor account through the Bank of Zambia investor portal. You open what is called a CSD account, then that will enable you to buy a bond, okay, using the Bank of Zambia investor portal. So if you are buying a bond in the primary market, which is usually through the investor portal itself, through the first time you buy, you use the portal. But later on, when you have started trading in when you're holding this bond, should you decide to sell it, you're able to sell it through your broker or your bank dealer, okay? And then you simply decide how much you want to invest, then you put in the amount. The minimum amount for the Bank of the government bonds through the portal is 1,000 kwacha, so you can invest with as little as 1,000 kwacha. Then for shares, sorry, let me just go back there. I didn't talk about the minimum amount. Most people ask us that question. What's the minimum amount? So the various brokers that we have in the market, they have different minimum amounts that they require you to open an account with them. The same way that you do with the banks. You find some banks have a minimum amount of 500 kwacha. Others will tell you they do not have a minimum amount. It's a similar situation with the capital markets and with the brokers that you find in this market. Some will charge you 500 to open an account. Some will say we don't need you to charge anything. We won't charge you anything. We simply need you to deposit the amount of money you want to actually invest. Of course, there's a commission attached and things like that. So that's why you need to do your research before you can even put your money with any one of them. Okay? So for shares, usually the share prices will determine the minimum amount that you can invest in. For example, if the share price is 2 kwacha or 3 kwacha, you then decide, oh, I want 1,000 shares. Simply multiply that amount, and that's the amount of money by the share price, and that's the amount of money you can invest. Okay? So for the bonds, like I mentioned, for you to invest, the minimum amount is 1,000 kwacha. Okay? So you buy the bonds at auction, which is in the primary market, or in the secondary market. You can also buy a bond through your dealer, your bank dealer. Okay? Then you can hold the bond to maturity or sell along the way should you need your cash. Okay? Then for collective investment scheme, which is the third product I talked about, here you identify a licensed fund manager that is offering unit trusts. So the commission authorizes the collective investment schemes, and they license the fund managers that are then offering investment advice and managing these funds. Okay? So you select a fund manager, you identify one, and then you select a fund that matches your risk appetite. Okay? So like I mentioned, a collective investment scheme is simply a pooled fund of different assets that can be invested. So you will find what is called an income fund or an equity fund or a property fund and things like that. Okay? So you identify which one you want depending on your risk appetite. For example, an equity fund is considered high risk simply because it's investing in equity. Remember, we talked about shares being high risk, so therein lies your guidance to say, okay, so this one is high risk, so depending on the risk that I want. But then again, since it's a collective investment scheme, your risk is spread amongst the different stocks that are in that particular equity fund. Okay, so once you select that, you complete application forms that you'll find with your fund manager. Again, you'll be able to find this information on our website. You'll be able to see a list of our fund managers and the types of funds that you can invest in. Okay, so the units under a collective investment scheme will be purchased for you on behalf of the fund manager. Again, you can track your investment. As a smart investor, you need to track your investment and check that your investment is performing well. How do you do that? You can get a statement. It's your right as an investor to get a statement or request for a statement from your fund manager to monitor your investment, okay? Okay, so most people will ask, why are some investments making money and others are not, okay? So in most cases, you can make money if a company outperforms its competitors, for example, or as an investor, you recognize that there's value in some of the stocks that you've bought in, and then there's increasing demand. So share prices are usually driven by demand and supply. So if there's demand, share price will continue to go up and things like that, okay? So again, when the company generates profits and it pays dividends, that means this company is performing well and your investment is also performing well. And then you can also lose money. Remember, I mentioned that investments are there's risk associated with any type of investment, okay? So if competitors perform better in the stock that you've bought in, for example, that can bring down the stock price of your company, and that again, there's your risk, and then you can make a loss at that point. But again, please seek professional advice on how the company is performing. Please be consistent in checking that you are receiving statements from your broker or your fund manager, so that you just know how you can maximize the returns on your investments, okay? So we do realize that there's a lot of fraud out there, because a lot of people do want to invest. We all want to invest, and we all want to make money. We've got this appetite to make money very, very quickly, right? So before we make any type of investments, you need to ask yourself a few questions, all right? In the case of capital markets, you need to check that the investment that you are making is registered, okay? If it's in a fund, you check that this fund is registered with the commission, and you check that the person that's offering you this product is also licensed with the commission, okay? So number one, check that the instrument or in the investment that you're making is legit by checking who the regulator is, okay? Then also, you also need to check, have there been any complaints about this particular investment, all right, in the past? That's also something that should guide your decision to invest, okay? Then also, have the people who own and manage this particular fund been found in non-compliant issues in the past? You also have to just double check that you have not seen, or they've not been in the paper or in the press with a negative report, for example, okay? If at all they were, are they now compliant at the time you want to make your investment? Don't base your information on just the past. Also check the current situation. If the past, yes, they were non-compliant, what caused that? And what are they like now? What's their report like now? What's their standing like now? Are they fit and proper? Because the commission will always show you or indicate to you who is currently fit and proper, who currently holds a license, okay? Doesn't mean if they were issued a license in 2005 or in 2020, doesn't mean that license is still valid today. You still need to make sure you check that this license of the investment of the fund manager, for example, or a broker that you want to invest with is valid, okay? Yeah. So that's some of the ways in which you can protect yourself, okay? And if the investment that you are trying to make is sounding too good to be true, it probably is. So usually ones that are promising high returns and things like that, do your due diligence, just double check, find out exactly what they are investing in, okay? So how do you decide? Because like I mentioned, you can use either a broker or a fund manager, or you can just go straight on your own with the Lucy app, okay? How do you decide when you need help or if you need help, okay? So if you like, you can do research, you can ask questions on your own, but if you are busy or unsure, please I'll say that again. Please, please seek professional help. Seek a professional assistance for somebody to actually guide you from a licensed provider who will be able to give you investment advice. So who can help you out there? We have brokers, we have the banks. Most of the banks that you find hold a dealer's license with the commission, so they too offer some investment advice, okay? You can speak to a fund manager and a collective who runs and manages a collective investment scheme to assist you. Then you can also speak to independent advisors. There are individual investment advisors out there. So the difference between, let's say, an investment advisor and a broker is that the investment advisor usually just gives you investment advice. Their license does not allow them to get the money and make the investment on your behalf. So that's something you need to take note of, okay? So they give you advice on where you can place your money. They can also do a risk profile for you and just help you to make a decision on how or where you should be investing, okay? Then the brokers, they can do both. They're able to give you advice as well as make the investment on your behalf, okay? Because their license allows them to do that. So other services that are offered in the market, like I mentioned, there's a collective investment scheme. There's a financial advice for products like the shares, your bonds, and your unit trust. Okay. And as you are also making your investment decision, or your decision to know whether you need an investment, you also need to know that there are different firms that are operating in our market, and the quality of the firms varies, okay? So do your research. Find out, how does this firm operate? Does this firm charge fees? What kind of fees do they charge before you make your investment, okay? Yeah. So choose wisely. Ask colleagues, ask friends, but please do not make your final decision to invest just based on let's say, a celebrity endorsement and things like that, okay? Make sure you have done much more research before you can invest. Remember, it's your money and you are the one responsible for this money, okay? So the first line of protection for yourself as an investor is you asking the right questions and doing your research, okay? Then also talk about how and why you should monitor your investments. So like I mentioned, it's your money, so you are the one who needs to monitor it. Nobody else is going to monitor the money or your investment on your behalf, okay? So since it's your money, it needs to work for you. So the money is like your employee and you are the boss, all right? So monitoring your investment it means you make sure that it's still working towards your goals. Remember in the start when we started, before you start making your decision, as you are making your decision to invest, you need to make a financial goal. Understand where you want to go first. So along the way, as you are monitoring your investment, you need to find out if your eyes are still on that goal, eyes on the ball. Is it still working for me? Okay, that's why you're going to monitor your investment. Is it still helping me achieve what I want to achieve at the end of the day? And how often should you check? So daily checks are a bit too frequent because they'll make you panic. You'll be seeing that today the money didn't grow, tomorrow it didn't grow. And remember, we're dealing with capital markets, which are long-term in nature, so the growth can also be a little bit slow and whatnot. You might start panicking if you're checking on a daily basis, okay? Once a year also may be a bit too rare. So maybe every other month or 6 months, you do a review of your portfolio just to check where you are, okay? Yeah, depending again on your goals. What are your financial goals which you had set at the beginning of your investment journey, okay? And then what you need to compare your investment performance against other similar investments or an index, okay? You check that it's growing at a particular rate, then that will also just guide you. If you're comparing with something, it will guide you whether your investment is underperforming or actually meeting the standard at which it should be performing, okay? Then you also check if the returns are fair for a level of risk, for this particular level of risk that your product is associated with, okay? You also compare the fees and the commissions of the standard versus of industry practice. Like I mentioned, the brokers and the different people, intermediaries that are working in the market, they do charge commissions. So just find out that the commission fees are not so high to a point where they're eating into your investment. That's also something you need to look out for as a person who is investing. Okay. Also, transaction checks. You should also review and confirm once you are dealing. In this case, if you are buying and selling, let's say your shares, just check what your transaction is saying. For example, if I stated that I would like to sell 500 shares at a particular price, just verify that this is the amount that the transaction actually happened at and not something that you didn't state. Okay, so always just verify that your transaction information is correct. Okay, you verify the prices, verify the quantities, and make sure they match what you had agreed to do. Okay, if there's any mistake in the way your transaction was posted, it's something you can quickly report to your broker. Okay, yeah. Some of the warning signs as you are monitoring your investments, you should check for unauthorized trades. If you find that maybe there's a transaction on your account that went through without your authorization, it's something that you need to immediately write and inform your broker about. If at all it is not resolved, you can then escalate it to the commission. But your first line of complaining should be your broker or your intermediary who offered you the service or the product that you purchased. Okay? So the role of your advisor must be to recommend investments that suit your investment goals and your risk tolerance. That's why it's important for you to seek professional help. And their goal is to make sure they meet your needs. If you mentioned your need is to save for, let's say, a child's education or whatnot, the type of products that they'll recommend is something that will work towards that particular goal for you, okay? So in most cases, your advisor should not, under any circumstance, prioritize them making a commission over the best interests of you as a client, okay? As you as an investor. Okay, so key takeaways from today's presentation. Firstly, saving and investing are lifelong habits. It's something that you need to start at any point, but you keep working at it, and it's something that you just don't do for a particular period and it ends there. It's a lifelong habit, and it's something you need to cultivate and keep growing with it, okay? You can start small and start at any point, all right? Then another point is that SEC protects investors in the market by ensuring that the people who are working in here are fit and proper. But then again, you need to protect yourself by asking the right questions before you give your money out, okay? That is so that you avoid to be defrauded, or you avoid the scams and all the schemes that are out there, okay? Educate yourself. Make sure you ask as many questions as possible, and then also diversify. I mentioned different products in the market, so diversify, meaning do not put all your eggs in one basket. Spread them, that way it helps you to mitigate the risk associated with any particular product. And before you invest, always verify. Seek a SEC license or ask for a SEC license if the product is found in the capital market. If it's not, find out from the other regulators as well where this product is falling. This is where I end my presentation. Thank you so much.
Thank you, Sally. Hello. Thank you, Sally, for that presentation. I actually enjoyed the key takeaways from your presentation.
Thank you.
Where you pointed out saving and investing are lifelong habits. The second thing is that you need to start small and you need to start now. And the third thing is that SEC protects its investors in the capital markets. And the fourth, and most importantly, is that educate yourself, diversify, and always verify before investing. I quote Warren Buffett, who says that the best investment you can ever make is in yourself.
In yourself, yeah, true.
And that is in terms of educating yourself, getting the knowledge that is required for you to make fit and proper investment decisions. So with that said, we shall go into the comment section. I do believe we have some questions in the Q&A. Vincent Tolle is asking, do you have an automated tool used to assess the risk appetite of an individual with regards to investment? With your permission, I feel I can go ahead and answer this one. With regards to this question, you need to know that your investment advisor would be in a better position to advise you on the approach that would determine your appetite in this case and what type of risk you wish to incur with regards to the investment you are making. Ultimately, this question, the answer to this question is seated with an investment advisor who you can find on the SEC website. Moving on to the next question, anonymous attendee says, there are some brokers that are not on the Luce app. Do you just pick any broker?
Do you just pick any broker?
That's the key takeaway. Do you just pick any broker? As it is, for example, Lusaka Stockbroker Zambia is not on the Luce app.
Okay, so thank you for that question. So during my presentation, I mentioned before you make your investment, you need to find out whether this investment advisor or this broker is licensed. So it's up to you as an investor to shop around and find out which broker you would like to invest with or to help you make the investment, depending on the various services. They offer various services that the brokers can offer to you. So yes, some of the brokers are not found on the app, but then there are plenty other brokers that you can still find on our website as well as the Luce website to help you navigate your investment journey.
Thank you, Steli, for that comprehensive answer. Chivale Kunda asks, why is it more risky to invest in equities than bonds?
Okay, so because share prices rise and fall based on demand and supply, and then also the performance of the companies varies depending on the industry that this company is in. So therein lies the riskiness, and they are quite volatile in terms of share prices, quite volatile. So it's something that you need to just move and ask for professional advice before you can get into that space. But then also, it will depend on your risk appetite. So if you are a risk taker, I'm pretty sure you can get into equity.
Yes. Thank you so much for that answer. I believe that is a very, very well responded. Victoria Monza asks, should we doubt the credibility of any broker listed? If so, why are they listed? Should we doubt the credibility of any broker that is listed on our website, for example? And if so, why are they listed?
Okay. So remember, we are doing this for financial education. We're simply trying to make you aware that there are people out there who can purport to be licensed and are not licensed. So the reason you are doing your verification is simply to make sure that this person is not lying to you. But otherwise, all the licensed brokers and dealers are found on our website. So yes, those ones that are found on our website are credible, and they are in good standing in the commission and are fit and proper at the moment, and are the advisors or brokers that you can deal with.
All right. Thank you, Steli, for that. We have another question from Lillian Mwale. Will you be able to present on collective investment schemes so we can appreciate them?
Okay, so if I get you right, you would like another presentation on collective investment schemes. Okay, so we've taken note of that. And usually what we do collaborate with our market operators. So we could actually get a fund manager who's running or managing collective investment scheme to come and just speak further on how to participate in the collective investment scheme and give you the pros and cons of doing this particular one. So we've taken note of that as a team.
All right, we have definitely taken note of that contribution from Lily and Mwale. Bravi from Facebook asked the question, what are the interest rates for bonds in Zambia, or how are the rates set?
Okay, so for the bonds, you need to go to the Bank of Zambia website, and they do issue before every auction. They'll show you what the rates are that are pertaining to a particular bond, and then you can make your investment decision. Okay.
We would like to encourage you to keep your questions coming. Yeah. I do understand we have 6 more minutes until 15. If you have any other questions to ask or an area of the presentation you did not understand, please feel free to make that, to give the question. Okay, we have a question from Paddy. Paddy asks, we noted that one kwacha square has been listed on Luce. However, it doesn't seem to be on the app. When is it expected? That's Paddy.
Okay, so the commission, as the SEC, we are not the ones in charge of the Luce app. That's an app that is under the Luce itself. So they will be better placed to advise when that particular stock will be available on their app.
I hope that answers your question. I do understand when you say one kwacha square, you are referring to the One Square K Property Development PLC, yeah, which was listed recently.
On the OTM.
On the
Yes.
Yeah. Okay. We move on to the next question. Vincent Tole, are you going to share this presentation or not? Yes, we always share our presentations after the meeting has taken place. Just look out in your email. Mike Musangu asks, bonds do not appear on Luce app. Would you kindly shed some light on this?
Okay, so like I mentioned again, the Luce app is under the preserve of the Luce, and I think currently what they have equity, but I'm pretty sure it's something that we can communicate to the Luce in terms of how they manage it, and they will be able to advise on what other additions in terms of stocks they'll be adding to the securities that you find on their app or that you can access on their app.
Thank you for that response, Stali. We have a follow-up question from Victoria Mwanza. Okay, before we get into that question, let us quickly respond to Paddy Sianga, who asks, do you also intend to run an information session on treasury bills?
Okay, so we do not regulate treasury bills. This is simply because they are falling under the preserve of the Bank of Zambia. They are short-term in nature. Remember, anything that is below 12 months falls in the money markets. So we are only speaking to products that under the capital markets.
While we are on the same subject matter, anonymous attendee asks, is there a standard transaction charge for bond and T-bills purchases? or are banks free to set their own charges based on bank account type and amount involved?
Okay, so again, for the treasury bills, that's under the preserve of the Bank of Zambia.
Yeah. Okay.
Yeah.
Okay, Victoria Mwanza, maybe you could just put your thoughts together. I see you are making follow-up questions. Just put your thoughts together and send it as one so that we can ask it as one cohesive question. Thank you. We have a follow-up question from, or rather a new question from anonymous attendee. I should think that One Square KPLC is yet to list as it is pending regulatory approvals. What has happened is just announcement to that effect that they intend to list on the LUCE. Actually, anonymous attendee is clarifying, making that clarity to say that it's pending regulatory approvals, but what has happened is just an announcement to that effect that they intend to list on the LUCE, which is actually factually accurate. Thank you for that clarification, anonymous attendee. Victoria Mwanza? Okay, without much ado, looking at the time, we would like to thank you for your participation in today's town hall. We do understand that we are always happy to present to you the latest information that you need to know to make well-informed decisions. And we're always welcome to receive more of your requests in terms of the topics that you wish to present, that you wish for us to present to you. And we apologize for those who feel they were expecting to receive the presentation as advertised, but please take heart. We shall make that presentation next week. Yes. So with that said, Stali, thank you for your time. Everyone, please enjoy the rest of your day, and please be rest assured we shall send you the presentation. Okay. Thank you.